let's see management of working capital. So what is working capital? So working capital is equivalent to current asset minus current liability. So what is current asset generally? Cash in hand, cash at bank, debtors, stock, bills receivable, prepaid expenses, accrued income. These are all current assets. What is current liability? Short-term credit, bills payable, creditors, outstanding expenses, short-term credit. So these are all current liability, right? So investment in current asset by a firm is called gross working capital. Is called gross working capital. So the net working capital is equivalent to difference between current asset and current liability. So gross working capital is equal to investment in current asset by a firm. Net working capital is equivalent to current asset minus current liability, right? In current asset, normally in working capital, in order to find out working capital, what are the elements to be posted in current assets? So stock of raw material, stock of work in process. This work in process is nothing but raw material percentage, labor percentage, and overhead percentage. So raw material percentage, labor percentage, overhead percentage equal WP. Suppose for example, raw material 100% converted, labor 50% converted, overhead 50% converted. This is equal to WP, work in process. Then stock of finished goods, then debtors, then cash in hand, right? So this is current asset. This is current asset minus current liability, less current liability. What are the elements comes under current liability? So credit or payment, we have to make payment for creditors, no, credit of material, so creditor for wages, and creditor for overheads, So current asset minus current liability is equivalent to working capital, So working capital is equal to current asset total minus current liability total. Sometimes you need to allocate certain funds for contingency. Emergency situation, you need funds. So in this situation, so we need contingency reserve plus contingency reserve. So working capital plus contingency reserve is equivalent to net working capital. This is a format of working capital management of estimation and financing. So what is permanent working capital? Permanent working capital is equivalent to it is a minimum level of investment we have to invest in current asset. Minimum investment in current asset we have to invest. Minimum level of activities we have to carry it out. It is called permanent working capital. Minimum investment in current asset and minimum level of activities to be carried out. What is temporary working capital? It is a part of total working capital. Above permanent working capital. Above and over permanent working capital. So it is the amount we are going to invested in above and over permanent working capital is called temporary working capital. Right. So what are the factors determining the working capital for a company or a firm? So what are the factors of working capital? Determinants of working capital. So in order to find working capital, first you must know the nature of your business. What kind of business you are in. So that working capital may vary from business to business and depends upon the market condition. Market is in favor of you or against you. Next, demand, very important condition, demand condition. Then operation efficiency of the company, how much cost they are saving. Operation efficiency of the company, improvement in each and every area of working environment. Next, credit policy of the company. And finally, the level of current assets. So these are the factors or determinants of working capital. Next, what do you mean by working capital cycle? So working capital cycle is equivalent to raw material storage period. How much period we have in raw material storage period in terms of days or months. Working WAP period in terms of days. Finished goods period in terms of days. Debtor period in terms of days minus creditor period. For easy understanding, I tell you 20 days we are investing in raw material, 20 days in raw material, 10 days in WAP, 20 days in finished goods, debtor 30 days, debtor 30 days, creditor 10 days, creditor 10 days. So 20 plus 10, 30, 30 plus 20, 50, 50 plus 30, 80, 80 minus 10, 70, 70. So 30, 50, 80, 70, 70 days. So 70 days is our working capital requirement. 70 days is our working capital requirements. Next, how to find raw material storage period? How to find raw material storage period? This is very important. So you must know how long we have to keep our raw material. So raw material storage period is equivalent to raw material storage period is equivalent to average stock of raw material by average cost of raw material consumption per day. So raw material storage period is equal to average stock of raw material by average cost of raw material consumption per day. So you can find raw material storage period. Next, WIP holding period, work in process period. How to find work in process period? That is equivalent to average WIP by average cost of production per day. So if you are dividing average WIP by average cost of production per day, you will be getting WIP period, right? Next, finished goods period. Finished goods period is equivalent to average stock of finished goods. Finished goods period is equivalent to average stock of finished goods by average COGS per day. Average COGS per day. Cost of goods sold per day. Next, receivable collection period. So receivable collection period is equivalent to average receivables. Receivable collection period is equivalent to average receivables by average credit sales per day. So average receivables by average credit sales per day is equal to receivable period. Creditor period. How to find creditor period? Creditor period is equivalent to average payables. That is opening payable plus closing payables by 2. Whenever the average, it's always opening plus closing by 2. By average credit purchases, not cash purchases, average credit purchases. Average credit purchases per day. If you divide, you will be getting creditor period. Next, estimation of raw material inventory. How to find estimation of raw material inventory is equivalent to how many units you produced, production units by either 12 months or 365 days into cost per unit into average storage period. Next, estimation WAP is equivalent to similarly production units by either 12 months or 365 days into WAP per unit into average WAP period. Average WAP period. Next, how to find estimation of finished goods? Estimation of finished goods is equal to production units by 12 months or 365 days into cost of production per unit into average finished goods period. By solving problem, you can is able to understand easily. Next, receivable period is equivalent to sales units, credit sales units by 12 months by 365 days into cost of sales per unit, cost of sales per unit excluding depreciation. Depreciation, there are two methods of computation of debt are, one is cash cost basis, another one is sales approach. Cash cost basis means only cost of sales to be taken. If it is a sales base means sales can be taken. Cash cost depreciation to be eliminated. So cost of sales per unit is into average collection period, into average collection period, average collection period. Suppose month means month by 12 months, days means days by 365 days. Similarly, creditor period, estimation of creditors is equivalent to estimated credit purchases, estimated credit purchases by 12 months or 365 days into credit allowed by the supplier, credit allowed by supplier, Estimated credit purchase in terms of rupees. Estimated direct wages is equivalent to labor hours by 12 months or 365 days into average time lag in wages. Estimation of overheads other than depreciation is equal to estimated overheads by 12 months or 365 days into average lag in payment in overheads. So this is overheads. Estimate overhead by 12 months or 365 days into average lag in payment of overheads. We can make a payment after 1 month or 2 months. That period you can mention. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.